Hi, good afternoon, everyone. Welcome to this very special episode of Vantage Point by DigiJanus. This episode has been adapted from our first episode, which was a panel discussion. And this one will be completely focused on how Sam and EndowUs are disrupting wealth management. So, without further ado, let's get started. So, welcome, Sam, to the episode. Now, when I hear the word endowers, it has a huge fan following. I am a customer. I know friends who are customers, and it has created quite a buzz. So my first question to you is, what are you and endowers doing differently?
Well, it's great to be here, Laksh, and thank you for inviting me. And it's a great question. I guess the biggest, reason why people resonate with the mission and the work of Endow Us is mostly because we try to solve a pain point that is very much real. It's something that we've all experienced as individuals trying to save and invest our own money here in Singapore and across Asia. And it's the pain of having to pay too much fees. The fact that we don't, it's difficult to invest well, because there aren't products that we know are out there, but doesn't seem to be available for us. And we don't receive the kind of advice that we feel is going to really help us. Many people confess that they don't feel that they know enough, or they have enough tools or information or knowledge or education for that matter to make the right decisions that's going to help them build wealth for the long term, secure their financial future, and be prepared for really important issues like retirement, which is what we feel the biggest generational challenge we face as a society. So Endows is set up just to increase the chances of success for individuals in all of these areas. So the things that set us apart, and we are, unlike Mike's point, we are a little bit more disruptive, and we do go head on because we're not a B2B or B2B2C solution. We are a direct to consumer solution. We are trying to help the individual retail investor get access to great products and solutions and tools that will give them better success. We want to give them advice in a digital platform with great content that will help them reach their goals earlier and in a more personally suitable manner. Give them a wonderful experience on that digital platform as well. So I think what we consider the most important thing, the three pillars of success in wealth, we believe is advice, access, and cost, especially here in Singapore and across Asia. And we're trying to solve those three big problems. So last thing first, we want to be fee only because that is where the world is headed. We don't want this complicated structure of people, taking different fees and commissions and kickbacks. And there's so many names for it. It's just not even funny. Retrocession fees, trailer fees, whatever you want to call it. We don't keep any of it. We give it all back to the customer because they don't deserve to be paying that. So we're a fee only provider of services because we only want to get paid by the client who we serve so that we can always do what's in the best interest of the client. So we completely align to their best interest. We're independent, so we can give independent advice. It's not biased. We're institutional way of investing. So like a sovereign wealth fund, we are empowering the individual to make better choices. And we're actually being holistic as well, which is really important, managing all of your wealth. So we're the first digital advisor to span both private wealth and public pension savings, which is CPF and SRS here in Singapore. So you can actually manage all of your wealth seamlessly in a single app in a holistic manner, which is really important for you so that you can succeed.
Thank you, Sam, for that wonderful answer. Absolutely, I believe your message has resonated with so many customers out there, and it is great to hear that you're optimizing the three uh, very key pillars to wealth management: advice, access, and cost. And it is great to see you do all of this great work with Endow Us, and the message resonate with the customers. So Sam, you made a very interesting comment, and about the platform and access. So this that brings me to the second question for you: is there so many banks out there? Why are they not doing the endowus model of refunding trailer fee and working towards the access and cost and platform and all of this? So I would love to hear your thoughts on that.
Yeah, great question. I think this is something that is asked very often, and it's not an easy question to answer because I'm not in their shoes, so I can't speak for them. But I think the most common answer that people put forward, and I think it's the right one, is that fundamentally they are what's called incumbent players. They own the client and the business of the client. It's a highly profitable business, the business of wealth. So they have to start by cannibalizing their own business because they're the incumbent players. There's a lot of inertia not to change what is working for any institution, whether it's financial or otherwise. So that inertia is something that works against them. And it's interesting because we've gone to some of these banks and we meet some of their digital strategy guys, digital guys, or there's a strategy guy, or there's a you know somebody who is in the CEO's office. And they come to us because EndowUs is interesting, it's different, and it's exciting. And so they want to learn, but also see if there's ways we can partner up. And one of the most obvious ones is CPF. We're the first and only digital advisor for CPF approved by the CPF board and the government. No one has actually built a technology stack purpose built to solve the CPF investing. We're the only ones that did that when there was nothing available. It was a completely offline experience. It took 2 weeks to even open an account, and we make that a 5-minute experience, and you can invest your CPF immediately. We can pull the money out, unlike cash, where you have to deposit the money and transfer it over. So it's a seamless process. But we had to spend 2 years building a purpose-built tech stack, spend millions of dollars, and hire a lot of engineers to build that in-house because there's nothing out there. There's no B2B robo solution out there that you can take off the rack and do this. So without any possibility that the government was going to guarantee us an approval. So we had to take a risk, and only a startup can do that. We have to go for something that is not there in existence and create something out of nothing. Luckily, we did get approval, and we're off to the races, obviously. Now everybody wants to do it too. But if you build the tech stack to just do cash, and SRS maybe, but never really thought through how you do the CPF investing process within the existing frameworks, which is very complicated, then you're not going to do it. DBS, which is the biggest bank, they have the people, they have the resources, they have the money, they have the technology, they have all the accounts, and they're an agent bank of CPF. Does not have an end-to-end CPF investing technology stack, which is phenomenal, like, which is crazy for me. But it's an opportunity for people like EndowUs because we can go in there because they don't see that opportunity and take it away from them.
So, Sam, that is actually a very, very insightful answer, and it makes me think that sometimes the risk reward ratio for projects like just you just mentioned about the SRS is highly skewed towards a startup doing it rather than an incumbent. Sorry, because it is just a different level of risk. As you mentioned, you spent like a couple of $1 million even before you had any guarantee of returns on the SRS, on the CPF investment journey. I'm sorry about that. And so that is absolutely amazing. Yeah, thank you for sharing that perspective. So, Sam, we often hear about fintechs and how this is a great time to raise money and access to all the technology and resources. But I want to spin the table on you here, and I want to ask you, what are the what are a few challenges that EndowUs face because it was not a financial institution, or general challenges as a startup that you faced?
I think there's many challenges. Obviously, we were doing things that weren't done before. And so that's always, when you're a pioneer, you're always, experiencing things that no one else has experienced before, as Mike can attest to, and Reg as well. The biggest problem I think we faced was really just, acquiring high quality talent. The banks with the big brands have an edge on us because they can give them a high salary, starting salary, give them a fancy title, give them a good brand with a business card. And young people go for that, right? But I think we were able to get people early on who really believed in the mission and the vision of the company. And that, I think, is the most important thing when we look for people. And those talented individuals, we've really lost virtually nobody in senior leadership throughout this 4 or 5 year journey. and they're all owners of the business. And that's what's different is we really believe in what we're doing. We're all owners of the business, which is very different from working for a big financial institution. And so I think that's the big benefit of a small startup is that we actually have control of our own destiny and our future. And so as the company grows, I think we resolve that very quickly. The valuation of the company goes up, people see the potential, they see the validation. And at this point, we were up to about 100 people, but probably continue to grow. And we're getting really high quality people apply. And that's really what financial services is all about. It's the people, right? It's not, I mean, there's infrastructure, there's technology, there's regulations, there's a lot of things about financial services, but in the end, it's actually the people that are executing and, providing that service. So, we're really thrilled that we're getting really high quality people on board with the team these days.
Yeah, thank you, Sam, for that answer. And I think talent acquisition is a challenge across the industry. I don't think any organization out there would say that talent acquisition isn't a challenge in this competitive environment. And but I absolutely hear you. As a startup, it takes a lot more to acquire talent, especially when there is like such a high number of offers that everybody's getting lucrative packages and titles. But I am sure with your newfound valuation and the rounds you have already solved for these challenges. So thank you so much for that answer. So, Sam, earlier on the panel, I think you mentioned the banks own the customer. So that brings me to our next question that tomorrow, let's say banks start to offer an EndowUs like platform, which is refunding the trailer fee, charges a very small access fee for the platform only. Why would the customer stick to an EndowUs like platform rather than go to a bank? Because that would be easier as they are already banks customers. So this might be a very frictionless journey for them. So why do you think they will stick around on EndowUs?
Yeah, no, great question. And I was the one that mentioned that, the banks own the customers, but it's the phrase that the banks like to use a lot. They say that they think they own the customers, but the problem is they actually do not own the customers. They're there, but largely it was because there were no alternatives. And now there is, and that's a problem for them. And so the question that you asked Anurag earlier, why would they stay with an Endowas or a fintech company? The actual question is why would they stay with a bank? As Anurag highlighted, a bank is for lending, it's for credit cards, for your mortgage, for your deposits. But wealth is a specialized service. It's a very specific, specialized, solution. And Mike and his company is trying to solve, some parts of it. And I think there's a lot of mistrust in the banking sector when it comes to wealth because of the experience that people have had for such a long time. And that broken experience is causing mistrust, and there's definitely a pain point there. So companies like Endowas is solving that problem and pioneering a different way of solving this problem of wealth. And so that's why people are resonating with that. Now, what if a DBS or, I should have mentioned names, but any other bank come out with an exactly same service? What happens? First of all, I agree with Anurag. It's probably unlikely to happen because it means that they go to zero revenues from a very fat margin revenue business right now. They do virtually nothing and they take 1% to 3% of someone's savings every year. It's ridiculous. It doesn't happen in any other service. It doesn't happen in any other distribution business, but banks are able to take 3% of the life savings of an individual every single year without fail, which is ridiculous. And if they take that away, then that's 3% margin business that's disappearing with no additional value add. So it's something that is very difficult for them to do, but they're going to have to do it either because guys like us are disrupting them and the supply side alternatives are appearing, or in the case of developed markets, regulations are coming in, which is removing all of this. Commissions for distributing financial products is becoming illegal, evil as well, but illegal, especially in developed markets like the US and Europe and Australia. So that was a slip of the tongue, but it was a Freudian slip. Uh, so I think that banks can have that solution and maybe copy us. They already are. There's even a bank that's named their wealth service Prosper Us, like Endow Us. So I guess, they're copying us, and that's expected, right? We don't have a trademark on these things, but what we like about people copying us is that they're copying us doing the right thing. It is the right thing to remove these trailer fees. It is the right thing to give individuals better access to amazing financial plans like Mike is doing with his company, or giving them institutional frameworks of investing like we're doing. And those are all good things, and that should be common practice. That should be best practice, and that's what every individual should be given access to.
Thank you, Sam, and really many interesting points raised there, and love the fact that you say if they're copying us doing the right thing, that is a good thing, and that works in the long term for the customer. So, yeah, absolutely an amazing answer. Thank you so much. So, Sam, taking this to a different direction now, big tech has completely revolutionized, and they have been the engine behind a lot of this startup success, as you can get started with some of their infrastructure and computational offerings so easily. So but now we are also seeing big tech increasingly offer financial services, maybe not wealth management right now, but who knows, pretty soon. So how do you look at big tech when they are your enabling infrastructure, as well as a competitor out there for services that you do?
I knew you were coming for me, Laksh, with that question. So, yeah, I mean, it's exciting, isn't it? Because I think big tech has disrupted our lives in a meaningful way and in a positive way in generally. And, I think it's interesting that they're looking at finance because, fintech is the hot sector, and they feel that they need to grow and they need to diversify. They need to own a different vertical of the client's, life journey. And therefore, finance is something that comes up quite a lot. But what people forget is that financial services is a regulated industry. It's a licensed entity that you have to have. So it's a professional service. There's barriers to entry, and there's a high cost of providing that service as a financial entity. And I think people jump into this financial services a little bit too easily. And there are things that are easier. So unfortunately, the big commercial banking services are easier to disrupt, like payments or lending, or, point of sales lending, which is the hot buy now, pay later type of stuff, which is a hot sector. And then you have stock brokerage and you have wealth and everything else. But when I was leaving Morgan Stanley after a long career, I looked at the space of financial technology and I was getting excited. But I realized there were two areas which had very little technology application, which was still very much relationship driven, which didn't have much technology disruption and had tremendous opportunities because it's huge markets. And those two, one was wealth and the other one was capital markets or investment banking type services. Now, 3, 4 years have gone by, and we see a lot of companies that are in this space. And I think there's major disruptions that are happening. But I think again, you have to be both deep tech, but also deep fin. You got to know the deep layers of financial services, the pipes, as we call it, right? The middle back office stuff, the regulatory frameworks and all of those things. And it's much more complicated than, just, a delivery or an e-commerce platform, for example. So I think it's interesting that big tech's coming in. I have yet to see a big tech succeed in any meaningful way. So Grab launched their Grab Invest. Many big tech companies have tried to go into payments or wallets, but beyond that, there's not really much else that's happening. Or like SEA, all the Southeast Asian regional players, even China, they have the money market funds and simple deposit like products, but they haven't really solved the sophisticated wealth problem. And there's a reason for that. I think this issue of trust, the licensing, the regulatory framework, but because it's a very specialized niche area, you need to have deep expertise, and I don't think big tech really has it, or they have to invest very, very heavily and for a very long time in order for them to succeed.
So, Sam, absolutely, you raised some really good points in there. Love the part where how financial services is a regulated industry, so you need to know the deep end of the middle office, back office, and how the regulation would work. Absolutely understand that. And yeah, same. You gave some really really good examples of how big tech, though they are getting into some of they are being the wallets and payments, etc., getting into wealth management might be a very very different ball game. So yeah, great answer, very insightful, Sam. So if I could just summarize our discussion up until now, I think you made some really good points, and what we are seeing is that the financial institutions need to disrupt more, whereas big tech needs to get regulated more. So and in between we have fintechs who are doing an amazing job of disrupting and getting regulated as well, just like how EndowUs is doing and bringing great benefits to the customers out there. So, Sam, it has been an absolute delight speaking with you today. So, before we let you go, we would love to hear from you. One thing that you would love to change about wealth management today.
I think banks should be banned from providing wealth services. As a joke. No, I'm just kidding. I'm just kidding. But the reason as a joke is a joke. This is never going to happen. But the reason I say that is because, when people have given their life savings and their wealth to them, we entrusted them with our money. I have too. And it could be the retail bank, it could be a private bank, it could be a wealth provider, it could be a financial advisor. The biggest, pain point I have is that, the thing that frustrates me the most is that in Singapore, the word financial advisors has been hijacked by insurance agents, which is ridiculous. But also banks should be giving financial advice, but they don't. They push product. And we've entrusted them with our wealth. We've trusted them with giving us the right advice to build wealth, but they've just not delivered. And so my proposition is not that regulations ban them from providing wealth services. To Mike's point, if consumers are well educated and they have high level of financial literacy, I think it would just be natural in like 5, 10, 15 years that people say, why did I ever go to a bank for wealth services? I go to a bank for lending, credit cards, mortgages. But for wealth services, I'm going to go to EndowUs. I'm going to go to, a digital wealth platform because they're better, they're easier, they're cheaper, they're on our side. They've actually made an effort to help us succeed in our, reaching our financial goals. And so I dream of a day that that happens. And the one thing that is going to happen eventually, I don't know whether it's going to happen in 1 year, 3 year, 5 year, 10 years, is that the fee structures are going to have to change. That there is a sea change in global regulations where we are protecting the consumer, and Singapore and the rest of Asia has to wake up and smell the coffee and move towards that to protect the best interests of consumers, because that is what's right. That is what's in the best interest of society as a whole, so that we can get there together. And ripping them off through high fees in just distributing or selling financial products is the wrong way to go about it.
Sam, that is an absolutely delightful answer. If there was an award for the best answer for the episode, it would be for that question. Thank you so much for joining us today. For being so candid and sharing the EndowUs journey with our wider audience. Thank you. This has been an absolute pleasure speaking with
Thank
you.
you.
Thank you.